We got some big moves out there in both directions. Has Elon Musk lost his touch a little bit with investors? We'll talk about the price action of that now under 200. CRM, are you kidding me? Up 26 bucks? Algo's going wild. Cover Burlington stores, Best Buy, Macy's. We got a lot to cover. We got Marc Chaikin coming on at 8:15 for a market update. This is pre-market prep. Get ready.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders, investors. Welcome to Pre-Market Prep. Down 13 handles in the S&Ps at 43.5. We are almost 20 handles off the low of the session, so that's the good thing. The buck bounces back after decline yesterday, up 36 cents, 104.79. Bonds, they're down a little over half a point, 123 and 17/32. Crude working into 78 handle now, up 37 cents to 78.06. Gold down after a couple day rally, down 670, 1838.70. Silver back under 21, down 20.5 cents at 20.89. And Bitcoin futures having a $500 range, down $65 at 23,465. Let's bring in Triple D first. Triple D, did you have your head on a swivel last night? Holy moly.
Yeah, big moves. I mean, we are seeing wicked individual stock moves. The indices are kind of just choppy, but the individual stock moves are nothing short of incredible. I mean, the CRM move, I didn't look the expected move, but I can pretty much guarantee you that it wasn't 25 points. So there are some wicked moves. And then you get to Tesla, Investors Day, and again, we see this again and again where Musk promises a lot of stuff gets on there, and then obviously he's not living up to those promises immediately. So, he talks up stuff so much that when he actually presents what he's trying to present, is like investors become disappointed because he's not changing the entire world. I mean, think about what he was saying ahead of that conference, Mitch. He was talking about this is going to be earth changing, like global changing, like gonna give you the whole plan to save the earth.
It sounded like he was going to win the Nobel Peace Prize or something. He sounded like he was going to win.
And when he doesn't do that, investors are like, oh, this isn't that great. And this is the result you get. And it's down 15 bucks. And now you're taking out key support. So here you got two major companies going in complete opposite directions here. Indices leaking a little bit. I don't know. So where do you want to start? There's so much stuff we could talk about.
Well, let's start with Tesla, then we'll get to Salesforce. Let's go to Tesla, of course. It fails to impress at its investor day. Master plan part 3, right? This was supposed to be a big move here. Tesla has produced 4 million cars as of Wednesday. Of course, they talked about plans of how they were going to scale up to increasing competition. Elon and senior vice president of the powertrain energy engineering at Tesla, Drew Baglino, said that repowering the grid with renewable fuels as they ramp up battery production, both Tesla's electric vehicles and the company's utility scale energy store systems. So pretty much they're saying that they're going to be able, Tesla itself, to be able to put the energy back onto the grid that's needed to support mankind. That's where that comment came from, Dennis. Just to kind of state that.
It's just like, it's the commentary that drives me bananas. This person, and I respect Elon Musk so much as, a creator. I think he's one of the best creators we've had in the last century. Just the stuff he's accomplished. But his biggest problem is it's his mouth. He just can't stop, like he says, in the last conference call, not this earnings, the last earnings, he's like, well, Tesla's eventually going to be the most valuable company in the world. I mean, you just set, and it's great to have goals. But when you talk stuff up like this as a CEO all the time, the expectations you raise by doing this stuff is just so much. I mean, I don't think anything was said bad on this Tesla call, but he's talking about global changing. He's talking about, and again, it's nice to have those lofty expectations, but then when you don't deliver immediately, like he was basically saying, we're going to present something that's going to change, the entire globe here. And then he doesn't do that, and the stock falls $15. So it's kind of just his mouth, the cause of why we're down $15 here today, in my opinion.
Let's get into some of the positive that was stated yesterday, of course, and this was actually released before the Investor Day meeting, but was the large factory that they're going to be building in Mexico, right? It's a gigafactory in Mexico. It looks like they're going to be using recycled water to help with the water situation in that area. So definitely this one was a positive for them as they keep building more and more gigafactories around the world. And then it was this one, I think was definitely the slide to catch. I don't know if you guys caught this one, but this was regard to transitions to EV and pretty much Tesla's goal to produce 20 million electric vehicles per year by 2030. And so if you look at this slide, one thing that you do see is that you see on the Cybertruck there on the right.
Yeah.
Well, there's something above it that's hidden from us. And so it looks like this is how Elon started getting a little bit of the rumors going here. So what could it be, right? It looks like there's another truck coming sometime down the line. And then there's to the right of that looks to be maybe a Generation 3 platform. And so that's what's being talked about right now out there. Of course, you're seeing here the semi-truck and the Cybertruck, but there's some new products that they tried to highlight here, but didn't really give us any information. They just
I think the price action is what we should focus on here because this is I mean we need the price action and there is just a step down seller here and we are trading on the lows of the session 186.78. We continue to make new lows. I mean it's so hard to go the opposite way on things. I'll just alert investors there's a pair of lows surrounding the 183 area, a pair of daily lows 182.61 and 183.39, and then you drop off a cliff to just above 170. So pick your poison here. But looks like that 182 is going to come into play on a rebound. If you're trying to scoop this up early, I don't think you're going to get a shot at yesterday's low at 198.52. But let's talk about a stock going in the opposite direction. CRM, Dennis, it is up like this, and it looks like it's still bid. It looks like
it's been up there all night. So this is now an NVIDIA. This is now, even a PANW where these things don't typically come back in one day. But again, we're in a bear market. So they do seem to eventually leak, but they hold up. I mean, PANW is still up 6 days later after the good report. It's holding up well. NVIDIA really too just started yesterday because they dropped that mixed shelf on the market, which nobody even talked about. So, and again, when you see a mixed shelf drop, it doesn't mean they're imminently going to dilute the stock, but it means they can raise capital and they can do a number of things. So when you throw that out there, they're like, oh, they're thinking about raising capital. I mean, sometimes, companies like banks do mixed shelves all the time. They don't use them. But in this case, I think, the nervousness of the market, I think that's why NVIDIA was down yesterday because it was down after hours on that and it popped back and people were forgetting about it, but it was weighing on the stock a little bit. So CRM though, wow. I mean, Benioff does deliver in this case, blows it away. He had light expectations last quarter. So we were expecting, and then he comes out now, they're raising guidance and going. So I don't know what he saw that's changed his mind, but they did everything right here. Mitch, give us the numbers.
All right, EPS at $1.68 beat the $1.37 estimate. Sales at $8.38 billion beat the $7.99 billion estimate. They do see Q1 adjusted EPS to $1.60 and $1.61 versus a $1.32 estimate. Revenue up towards $8.18 billion on the high end versus an $8.05 billion estimate. So all estimates pointing in the right direction. Fiscal 24 adjusted EPS definitely over the estimate of $5.84, now to a high end of $7.14.
Expected move is $12. So it's crazy that people pay $12. That seemed like a high expected move too. I mean, it worked out in this case for 25. And again, you can pick your direction. You go 6 and 6. So then you're making some money if you're directional trading here. But the expected move not holding in. So it's double the expected move, which is a huge move. You think about the 200 as a logical stopping point. I mean, we saw this with Meta as well. Meta had the huge pop, stayed up there for 5-6 days, and then it started to leak.
Yeah.
So, I mean, I think that's the recipe here in this market. It's like when you report, sometimes they continue to go higher. It's definitely not, hasn't been a good idea to fade these huge pops on day one. But, Karen Feinerman says often wait till day 3 or day 4. You get a better feel for it. I think that's the case here too. I don't think CRM is going to give it back right away because the simple thing is, like you were saying, pre-market after hours trade up there the whole time. Market started to leak. This isn't giving back a tick. So they're loving this company here right now.
Yeah.
Does that mean this is going to be the driver and going back to all-time highs? I don't think so. I think eventually it'll start to leak. But I think that leak could come in a few days, not in a few hours.
Yeah, and talk about another stock filling the gap, NVIDIA, but you talked about the catalyst behind that. After my poor performance or poor analysis of First Solar yesterday, I'm just going to give you your a high in the pre-market at 194.90, and then if you go to the monthly, and you have a high of 194.37. So that's a decent number to me. Of course, you blast through that. Who knows where you're going, but that would be a focus number for me today, 194.90 for CRM.
So many now other companies reporting here. Go ahead, Mitch.
Just one adding comment there on CRM. It just shows me more and more not to bet against Elliott management because they just keep kicking it out of the water. Every company they're getting into seems to be doing pretty well.
It adds a floor. When you get Elliott behind you, and it's a good point here, Mitch, it seems to add a floor. I mean, look at Pinterest, and I believe it's Elliott. Is it Elliott and Pinterest? I believe it is.
Yeah, you're correct.
Same thing, they got in this thing around $20, $21. And again, it hasn't really gone too far, but it hasn't got killed either. And the market's been coming off the highs too. So, I mean, it does help to have that support of an activist in there. And I think there's buyers that just chase these. And as they pull back to those levels where the activists may have got in, there's more buyers there too. So it helps to follow these guys for sure. So I don't like to follow them the next day when they get the big pop. But again, when they pull back to the area where they were originally, the stock was before we knew about Elliott, that's probably more of the play. And when did we learn about Elliott in CRM here, Mitch? Do you have that in the pro? I know you can go back and find that stuff. Was this I feel like it was only like a month or two ago.
Yeah, it wasn't that far back. That's why I kind of wanted to state it. I was even searching for it. I'm having a little issues finding it really quickly here.
Yeah, I'm going to look through the pro here just at the same time with you because it wasn't that long ago. Maybe the chat can help us out here too. When we found out about the Elliott stake, just to see the price action and see if you ever did get another shot, because it always pops. When Elliott gets announced in there or rumored in there, it pops. And it's never a great idea to buy those pops, but it's usually a great idea to buy the pullback after the pop.
The Disney has been okay. I mean, it had the pop, and then he won the proxy
fight. Is it Elliott and Disney?
Yeah.
It is Elliott?
Yeah, and he also said Western Digital was a $100 company. I mean, there's, he's pretty good. Ooh, Western Digital coming down and filling the gap. So, I mean, it's a mixed bag. I agree with you, though, Dennis. I mean, that Disney, when he won the proxy fight after the earnings and was on CNBC, that might have been the greatest opportunity to sell Disney since September. That was that exact day. I remember him being on and doing his victory lap. Look what the stock did after that. So, I take it with a grain of salt, right? He moves some, he gets some right, gets some wrong, just like the rest of Wall Street here. But
January, you're not going to get 100%.
The date is January 23rd when they got this stake.
January 23rd. Oh, no, he's nailed this one. This one is just a flat out. Yeah, it gapped up that day. I mean,
we can see it now.
Don't bet against
it. It did come back, though. Look, Joel, the next day.
So it did. It filled the gap.
Yep. It came back. That was your opportunity. When it went to the 160 on Elliott, then the next day it pulled back to 150. That was the buy, the 150. I mean, this is the way to play these, in my opinion, is you get the pop, then you let it, sometimes it's rare it comes back the next day.
Nice little gap
really good opportunity. But if you can fill that gap back from the Elliott pop, those are decent opportunities here. And I mean, you can say Disney was hit. Or what's going on with Disney right now, actually? Disney's just down. Somebody was saying Disney's getting hit now. But Disney has been hit since the earnings, though. I mean, again, this was one they were taking a victory lap on TV. Kramer was taking a victory lap on TV. When they all start taking their victory laps on CNBC, ring the register and get the hell out, because that means everybody that's in it is already in it. So Disney just had such a ridiculous move. It's why I sold it as well. I sold early because I didn't want to take it through the print. 85, I sold out at 109 and 110, I believe, because I was just like, this is just too much too fast. 25 points in a month on Disney. And then it went to 120 and change. You won't see that on the thing, but after hours it was trading at 120. And now we've just continued to leak. So I do think you're going to get an opportunity back here in 90 to 95, and I will reload my Disney. So in the long-term account, because it's worked a couple times for us already. This is a key level. I'd love to get it back at 85. I don't know if you're going to get all the way there. Possible though. So I do like to pull back in Disney. And again, maybe it's only 98 it's going to give you, but I think, the way we're going with this market,
Do we got
I
Marc
feel like
around?
we're going to get more.
Marc Chaikin.
Got it. Yep. That's what time it is. You know it. Let's get to it, team. I know you guys in the chat were talking about it earlier. Let's get to Marc Chaikin here.
Hey.
How we doing?
We're doing great. The Power Gauge turned bullish on Salesforce on January 3rd. 136.
That's a great call there. And obviously Elliott was a driver here too, but I mean,
yeah,
it's a good earnings report.
Yeah,
what do you do?
So Dan Loeb is in there as well.
So Marc, and again, we're being seen that this is the market to take profits in when you got it. I mean, here's a huge pop. Your Power Gauge turns bullish at 136. The stock's 193, basically up 50% since your Power Gauge turned bullish. When do you sell? When do you take the profits?
Depends what your style is. If you're a trader, you definitely take it, although sometimes these things last for a day or two after the pop. So yeah, if you're a trader, you sell it. Long-term Salesforce, they've got a lot of things they can do. My favorite tool in the world ever is Slack. I wish they hadn't bought it. I wish it was still public. Singularly the best productivity tool I've ever seen. But that's just, they're pushing them to maybe spin it off, which would be a big win. But if you're an investor, you just hang on if you believe there's a bull market taking you to new highs, because this will go to another 50%.
Let's talk about that. Do you believe we're still in this bull market here that is going to take us to new highs? Obviously, we've pulled back significantly in the last couple of weeks here. If you're believing in the bull market, this seems like an excellent opportunity to get in. What's the Power Gauge showing now? Overall, in the overall market,
more bullish than bearish stocks, even though we've had about a 7% pullback. I'd rather talk about what to do in the market.
Sure.
I'm still a buyer on pullbacks. I wish some of the big names that have really had huge moves in the construction industry, like Fix and EME and MYRG, would pull back. But guess what? They're making new all-time highs. This is a market where you want to be buying the dips. And, whether you see it that way or not, as Walter Deemer, who was, the sort of creator of the breakaway momentum thrust that everybody who's technically oriented is keying on since January 13th, said, when you should be buying them, you won't want to buy them.
It's a great. I saw that quote go by on. I think it was getting around on Twitter yesterday.
Yeah,
yesterday. Because I saw it too. It's a great point.
It's a recurring theme with Walter, who's a brilliant guy. I called him when the momentum thrust triggered, because I watch it as well, and I had never talked to him. We had emailed once or twice. Had a wonderful 20-minute chat with him on a Saturday. Great guy, very thorough, and he's taking a lot of flack on Twitter right now, by the way, because of this bullish call that he made, which is ridiculous. I mean, if you don't want to be in the market, you don't want to follow a guy, just go away, but don't troll him. It's crazy.
Well, that's Twitter. If you want to be on Twitter, you will be trolled. That's one thing you got to understand. But one thing that I would ask Marc is that you're saying that bullish outlook, right? What levels are you maybe looking on the SPY, the S&P 500, for it to break that mentality?
Well, Joel asked me that 2 weeks ago, and I misspoke. I said 3960. The level is 3850 to 3870. So after these breakaway momentum thrusts, you get a decline of between 5 and 8%. Sometimes it happens from the day of the thrust, which was January 13th. Sometimes it happens from a higher peak, which in this case was 4,200. So an 8% drop from 4,200 takes you down to 3,865.
It's such a choppy market, though. Like, aren't you concerned that if we do pull back to 38.50, that's actually going to be the buying opportunity, and then we just rip higher here? I mean, momentum strategies in certain stocks has worked well, but in the overall market, it's just chopping up. And I've been warning traders about this as well. And I've been calling for a sideways market here for quite a while here now too. That we're just going to be in this prolonged chop because the battle between the Bulls and the Bears, even me and you, Mark, were battling it out last time you were on the show between the Bulls and the Bears. It's heated right now. And I think this heated battle just equals more chop. Like,
well, but if you're right, then you want to be buying the dips. If it's a trading range market, what could be better than buying strong stocks on pullbacks?
Or selling weak stocks on rallies.
Yeah, I mean, I don't think you should be shorting in this market because we've been saying for 9 months, avoid the previous bull market's favorites. But guess what? Zoom got a bullish rating in the Power Gauge 2 days ago.
Wow. Why? Why did Zoom? Or I guess
well, analyst estimates and changing psychology, and who knows why. It's 20 factors in the model, which is great. Because
I was just going to ask you about that, Mark. Do you run for the Power Gauge for the factors? Do you run one? So obviously you don't have one for the S&P, right? Because there's like different analysts. Do you have one for the S&P?
We have a rating. The rating's bullish for the S&P, the IWM, and the QQQ.
So and I don't want you to reveal the secret sauce here, but what in the Power Gauge would give you more of a bullish indication when the market drops 200 handles?
Well, but in the S&P, it looks at the number of stocks with bullish versus bearish ratings on both a weighted and unweighted basis.
Okay.
It looks at the trend of the market, looks at relative performance, and there you have it. It's the only multi-factor model for ETFs, and it does combine fundamentals with technicals. But by the way, I would still be buying the RSP instead of the SPY. I think the large cap, mega cap stocks are going to underperform, which means you want to be in the S&P, but equally weighted and get the benefit of some of the smaller cap names that are doing so well.
That chart looks a heck of a lot better than the SPY.
It sure does, because it doesn't have Amazon and Google.
Yeah,
and
wow, that's interesting. Wow,
and if Tesla ever gives it back, then it's really going to outperform the SPY. But let's talk about something to buy, because
sure,
Delta Airlines, got to buy Delta Airlines down here. Great chart, pullback. People are booking flights.
Yeah,
I'd almost like to recommend a cruise line, but
they're scary.
There's only one with a bullish rating, which is Royal Caribbean.
Don't worry, that's the one I'm going on soon.
There you go. You must be a big spender, Mitch.
Oh,
but again, my sort of partner, Pete Carmesino, who's got broad experience as both a money manager, an RIA, and a strategist, has always said, the technicals tell you when, they don't tell you why. You find out the why later.
Yeah, that's for sure.
Don't fuss about the why. Yeah, who knows what could happen? China could invade Taiwan. Nobody knows. And if you invest waiting for the other shoe to drop, guess what? You're going to miss 90% of all the upside in life. And sure, you'll avoid one slam down to 3,000 in the S&P from 3,900. But if you're an investor, you just can't be afraid of your shadow. It doesn't work that way.
All right, I'm going to come in here with a different one. I know we talk about the Power Gauge often, but of course you got the Chaikin Money Flow, right? Well, the money flow is starting to crack the zero line. Mark, what do we do if it starts hanging out down below the zero line?
Well, I mean, that's normal. What's not normal is put up CRM and look at the accumulation in CRM or RSP.
Ooh, there you go.
So that's what you look for. You see that kind of accumulation on dips, and look at the RSP. That's where they're buying, or the IWM. I still think small and mid cap stocks are the place to be in this market, and the money flow is telling you that. If you look just at those three, and say, okay, I can choose between IWM, RSP, or the SPY, it's got to be RSP and IWM. And the reason is clear, that small and mid-cap stocks are going to outperform. I often quote what my wife Sandy is doing, because she doesn't bring any baggage to this. She's got 4 stocks in her portfolio that are making new all-time highs. 4. Now, she also has some legacy positions in NVIDIA, and Adobe that are not doing well. But take a look at EME, and I'm not recommending these at this level. EME, FIX, and MYRG. Come on, are you telling me this is a bear market?
We're telling you it's a sideways market.
Well, but these aren't sideways stocks. That's my point. If you focus too much on the market, you miss the opportunities. These stocks all had bullish power gauge ratings for the last 6 months. Since before the October bottom. This is where you wanted to be, instead of debating with some idiot on Twitter about whether we're in a bull or a bear market. It's counterproductive. This is what's productive. Find strong stocks and strong industry groups with bullish power gauge fundamentals, however you measure them, and accumulation. If you look at Chaikin Money Flow in these stocks, you see what's going on. 2 of those 3 I just mentioned have incredible Chaikin Money Flow. So even NVIDIA got a bullish rating yesterday in our model, finally turned bullish. So, everybody's going to be standing at the station waiting for the train, and it ain't coming back into the station.
Even in the worst bear markets, though, Mark, and again, you can cherry pick 3 stocks that are pretty small companies here. Even in the worst bear markets, there are always some stocks that are making new all-time highs.
This is a whole industry group. You're right, Dennis. This is construction and engineering.
Yeah.
This is an industry group with 40 names in it, and 20 of them have bullish ratings. And the reason is we've got a $1.2 trillion infrastructure bill that was passed. Where's that money going? It's going into roads, bridges, tunnels, rebuilding our infrastructure. And these are the companies that are benefiting from it.
Is that good for oil stocks too, Mark? Because I just look at the pullback here. And again, I'm one of those traders that like, the dip to buy as opposed to buying stocks at new all-time highs, because I don't like to chase. I see all these oil stocks have pulled significantly off of the highs, and I see them still making a lot of money here. Do you think the oil trade still has, room to come back higher here again?
I do. I love Valero and PSX. I've sort of stayed away from the majors, although they're doing really well. But Valero had a nice pullback and then a pop, I think, yesterday. And PSX is doing pretty well. I think if you have a favorite natural gas stock, you should be buying it here.
What, do you have one?
What about MPC?
I like EQT. EQT is the largest. It has a bearish rating in the power gauge, so I can't touch it right now. But someone posted on the internet about what's happened in the natural gas futures market.
We got some numbers here, Mark. Yeah. I'm sorry. We're dropping. Dennis, watch the bids there. Watch the bids here.
All right, initial jobless claims coming.
Yep. Be well, guys.
Have a good one, Mark. You guys keep up with everything that Chaikin Analytics has to offer, and you guys can check out the power gauge yourself. I'm bringing in here the numbers as we come to it. 195,000 is the initial jobless claims consensus. We'll see what happens. Prior was 192. Let's see what we get on the numbers now. I'm putting up Joel's charts to watch the action.
Yeah, it's this is a thin area. And someone made a good observation yesterday about, where the next daily low was. And it's down here closer to 3,900. We have a pair of lows, and I don't know if this is going to come in today. 39,0175 and then 39,1175. So that's your sweet spot. But the way we're zigging and zagging and the intraday moves, maybe we'll get the flush today. But it just seems like even yesterday we took out the low of the move and then we came back to scratch, on the session. But I'm looking at that 39.25 doesn't mean much to me today. So we'll see what happens in the regular session. Triple D, what are you seeing in the equities off this number?
They're leaking. Again, we're seeing some rotation. To Mark's point, is this has been the market of rotation there, and there is bull markets in certain pockets for sure. There are bear markets in certain pockets, and there's sideways market. And overall, that's why the market keeps going just like this, I think, overall, is because you have so many stocks that are weak and other stocks that are strong. And it's just, and we've talked about the relentless strength in General Electric, which is just unbelievable here. But today I'm seeing pretty much selling across the board. Only thing I'm seeing stronger, Macy's, it reported, we could get to that in a second. So some of your retail stocks are holding up okay. Kroger had a pretty good day here too off the earnings report here. Some of the consumer staples are trading higher, which again is more defense here. But I'm looking at the banks getting hit here now. I'm looking at Tesla just leading the charge for.
Is it still going? Yeah.
Oh, it's still falling here, Joe. We're 186 here now, down 16 points here. So, I mean, this is, again, we often do see, and we've already talked about this earlier. If you were listening at 8 o'clock, I don't know if everybody was listening at 8 o'clock, but, often Musk talks up so much ahead of these investor presentations that when the investor presentation actually comes, it's more of a sell event because he just can't live up to his own lofty expectations because he's been promoting it for so long on Twitter. So I think that's the case here, but, we're definitely seeing some weakness across the board in the overall market.
All right, Phil, those numbers, initial jobless claims, of course, came in at 190,000 versus that 195,000 estimate. So still trending in the wrong direction in that case there. Non-farm productivity here at Q4, 3.2% versus 1.6% expected. And then USA unit labor costs showing a spike there for Q4 to 3.2% versus a 1.6% estimate. Prior was at 2%. So you were expected to come down. You actually went up there in the unit labor costs. Don't know how many people watch that, but that just shows us a little bit more about the wage stickiness out there and wage inflation.
Very sticky.
That's for sure. We'll take a look at some other stocks. I want to go ahead and get to some of the other earnings stocks. So there was one stock here that left me feeling a little bit like I'm stuck on, of course, the hanger here. I'm going to call it because I got caught in Burlington, team. That's me right now. They're hanging me up in Burlington.
You take it through the report?
Yeah, I did. I got screwed into the report, more like it. Let's talk about that. Let's take a look at the price action here. Their earnings came in and they beat on expectations. Q4 sales, $2.74 billion, beat the $2.6 billion estimate. Fiscal year 23 adjusted EPS at $5.50 to $6 versus a $4.02 estimate. That's definitely going to hurt. That's looking good to the upside. EPS also beat $2.96, beat the $2.73 estimate. So yeah, they got me on the coat hanger today.
That happens to all of us here, Mitch, the coat hanger. So, I mean, I'm on it almost every single day. I'm actually on it every day in certain trades. I mean, when you make some trades, there's going to be some winners, there's going to be some losers. So there's nothing you can do. Why'd you take it through the report? Just curious.
Well, I mean, the stock is up over 105% since October. I saw the TJX reaction to that report. It got hit down on a decent report. Ross got hit down after it beat. So I was like, well, this is the next discount one. It's up there near the resistance, has started rejecting the move. But yeah, as you guys can see, I took a hit on that one. And I don't take many stocks.
Are you still in
the
it?
Earnings. Yeah, I'm maybe working my way out here towards the open. I'm going to see if we can get a little bit of a tick down to try to work out. But it's a really small position for me whenever I gamble on earnings, just like you kind of mentioned yesterday, Dennis. It's just more like a little bit of a gamble, smaller size. Hey, and sometimes you win some, sometimes you lose some.
I usually cut the size. If I'm holding something as a trade through report, I usually cut the size down to about a third, because the moves are just so extreme. So I don't want to stomach a full size position. I'd have to be really, really convicted to take a big move through. And actually I took two stocks through here. I took Macy's through the report long, which actually worked out. And I was like, I cut a whole bunch of it out last night. And I was like, I can't take that much stock through it. But I just kind of loved the reaction to Kohl's. So the reason I took this
Kohl's
through long,
really rebounded.
I loved the reaction to Kohl's. Kohl's was a disaster, and they almost closed that thing green. I'm like, well, if Macy's says anything okay, they're going to rally the hell out of this. So I took a little bit of stock third, probably even less, probably a quarter of a normal size. I was really nervous about it. And I wish I was like, why didn't I take a full size through? And I actually already got out. I sold a 23. I almost topped. I sold some at 23.30 and I think 23.15. So in the low 23s, which was near the high this morning. Which, you know, I didn't time it perfectly, obviously, but
23.71 is where it got to.
So I got out there. There's a big buyer at 23, and I was kind of leaning on him a little bit too after the report. So it went up, and then it was coming down. It's like, it's getting too close to him, and then it's obviously or her, and it's come back in. But again, when you're taking these through, you know, I had a little inkling, I had a little feeling, I was a little more comfortable taking, you know, Macy's through the report for the simple reason is that I loved the reaction, even though Kohl's was a terrible report. I just absolutely love the reaction to it. So that's why I thought it was a low bar for Macy's, and it worked out. So, I mean, sometimes, you know, you can take those. You know, I do wish I took a full-size position through it, but I didn't have the guts to do that.
Wow, you got 23.71 was the pop, but we got a little bit of a reset. So you're $2 off the pre-market high. You got to take that into consideration. Just doing a reset here. You already traded through 22. So I want to give much significant here to the $22 area, 21.92. It looks like you can get that pretty easily. But the better area is an area of three highs, and it's right at the 22. Let's call it the 22.60 area for the next target. And then, of course, that pre-market high of 23.71. Market may be, you know, working against this a little bit today too. You know, a down market, you know, people are selling or taking profits, but that's what you look at. S&Ps we're leaking towards the low of the session here. No bounce on that number. There was nothing, no interpretation of any good news from that number. Pre-market low 39.25.
Yeah, we've got a big time leak here, continuing to leak. And now you start feeling like we've cut through the double bottom that we put in the last 2 days.
Yeah,
now
the range
by 393.64, held 393.38, also coincides kind of with the 393.5. So we found support, but now we're starting to take that through. So now you go to the next Joel Alconin level, and I'm just going to ballpark it and say it's 390. So another 23 handles down. I feel like you've got that in this market, maybe. Obviously, we don't always get down to it, but that's the next bounce level. So I wouldn't be jumping in here right now down 244. I think we could, you know, and especially with the way Tesla's getting killed here today. And again, if Tesla turns around at the open, they just start rip-roaring buying it. They might just turn around and buy this too. I think the next level you're looking at buying the dip is 390 though.
Yeah, I see a pair of lows. Actually, there's three lows flanking that area, and that goes back to the you know, to the two lows I mentioned in the S&P, or actually the three lows in the S&P. So yeah, 3,900 ballparking. Daily numbers 39.11.75. That'd be the next target. But that's what we've seen in this market, man. You know, who knows the path to get there. What about Snowflake? It looks like that's melting today.
All right. Well, I wanted to touch Best Buy, but we'll go back to
go Best Buy. Stay with the retail.
Yeah, go Best Buy.
Yeah, so this is one that I was very high convicted to the short side, was holding it for about 5 days. But yesterday it started coming back towards the close, and I got a little weak-handed. I took the small profits, didn't want to swing this one, and it looked like this one should have been the one to swing short. Best Buy, but hey, you know, hindsight 2020, right? Adjusted EPS $2.61 beat the $2.11 estimate. Sales of $14.73 billion beat the $14.72 billion estimate. They did see their fiscal year 24 adjusted EPS to $5.70 and the high end of $6.50 versus $6.71 estimate. So lower EPS guidance moving forward, and also comparable sales to decline 3 to 6%.
Well, let's see.
It was bid up ahead of the report.
Really?
It was bid up $1, and I thought about it, but I'm like, it's not enough. You know, when I've taken something and, you know, and I'm looking at, you know, and Macy's a different story. You know, I wasn't worried about, but if I'm taking like an edge, like, what was that stock that I was up $3? Dollar Tree was up $2 or $3. I'm like, that's enough. I was like $1. I was like, oh, it's up. Somebody's been 83.50. I was like, well, they're giving me $1, but I'm like, I don't know. And then I was nervous about the reaction of these retailers. You know, like the Kohl's scared me almost to be short retailers for the simple reason is that I like that reaction to Kohl's being a disaster and rallying. I'm like, well, if Best Buy says anything okay, it could rally. I guess they didn't say anything okay, though.
Oh, wow. Good thing you did cover that thing. That ended up bolting over 152. But this Best Buy, I don't have a best support area. This 80 has been sticky, but it's definitely cut through it. I'd have to say next daily low, if you're looking for more on this one, 78.63. But and I noticed this in the Dollar Tree too. So keep an eye. The buyers can be sneaky on this one, because when we were talking about the Dollar Tree, saying, "Oh, well, can it hold 140?" Because that's where it was trading in the pre-market, and that's where you had the daily lows. Well, it got nowhere near there on that opening print. Buyers stepped up right away. It ended up opening at 143.30, ticking 30 cents lower, and exploded. So not sure if that's going to happen at Best Buy today, but just it should be noticed. Some of the pre-market, I mean, the way you covered that Dollar Tree, I mean, not holding on. I mean, I know that's your style to do it, but surely worked out to the good. But boy, these
It really had
retailers,
a wild range, eh? I'm just looking at the
yeah.
Dollar Tree because pre-market it was trading down significantly, and then it opened low, and they just bought it. And sometimes you see this is why I like, if I'm taking these through, to get out of them pre-market, because you have wicked turns sometimes, even to your Burlington, Mitch. And again, I'm obviously, if you're short the thing, it's always scary, and sometimes these moves continue. But sometimes you see some wicked reversals too. So you're not going to see that in a CRM because the volume's higher. And again, you often don't see these wicked reversals when the volume's like 10,000 shares or 5,000 shares. Yeah. And when CRMs trade as much stock as it has, it traded a pile of stock last night, or it traded 813,000. These aren't typically just going to reverse just like that because they've traded up there for too long. But when you get these ones that are trading like 500 shares, 600 shares, and it's down like $5, oh, it's getting killed. It's a couple people sold that only. So I'm like, nobody's really voted here yet. So that's when sometimes you're like, wow, what a reversal. Well, on some of these smaller cap stocks or mid cap stocks, they trade 500 shares in the pre-market, it's down 10 points. Then you see it up 10. You're like, what a reversal. Yeah, well, one person sold it down there. So it wasn't like they voted and, they had 1,000 people voting. There's thousands of people voting for CRM right now. So it's a different story.
Yeah, and they're all voting to the buy side here, just hovering.
And as much as they're voting to the sell side on Tesla.
Yeah, it's Tesla. Well, you know what? This Tesla's sneaky too. I mean, you do have one daily low in this area. Just one? Yeah, 187.61. So you did get through that in the pre-market, but people love to buy the Tesla. Pre-market low stands at 185.42.
All right, let's get to Snowflake. You wanted to take a look at that, Joel. Let's go into it. Snowflake adjusted EPS at 14 cents, beat the 4-cent estimate. Sales of 589.01 million, beat the 575.72 million estimate. We'll see what happens. Is it time to go for the snow?
In my opinion, no. But at
keeps
the one
leaking too.
Yeah.
And here's another one like. And we were just talking about potential reversals and stuff, but this, has been hit. It tried to come back a bit. Now it's getting hit again. That's not the type of pre-market chart. And the main reason, like me and Joel started when we started pre-market prep 10 years ago with Benzinga, one of the main reasons we started this was people weren't using pre-market price action to trade intraday. Like me and Joel like to look, where did it go in the pre-market? Where did it go after hours? What's it look like? Because you can see a stock down 10, but maybe that stock was down 20 and now it's only down 10. And that tells a completely different story. And, a lot of your charts providers don't even include it in, the regular, tick charts, or they're not including in the regular candles. And I mean, this is so much information that we have here. So when I look at this pre-market chart on Snowflake, I don't see as much potential for a reversal for the simple reason is that this got hammered and then they tried to buy it back, but there was just too many sellers, and now it's getting hit again. This is not the type of chart that I'm looking for a potential reversal on.
And the only thing I would look at, I don't know what positions people have, but I look at that 135 area, and you don't in a stock like this, $140 stock, or it was $150 stock. You're not going to get the sweet double bottoms and things like that. But when I see 4 lows in the area, and I put I put a horizontal line there, 133.74 to 137.31, I just go 135. Right? It's a number. So there, the first time, I would keep an eye on that level longer term. If you're looking at, if down 1460 is not good enough for you. I will say if you do try and scoop this thing up, and I mean these things go all over the place. This 144 area found some sellers right after the kind of initial dip. Someone decided, 4 a.m. I'm out, and they hit the 144. So projected range 135 to 144 for shares of Snowflake.
I like that when you give the projected range. I like
All
Sometimes
right.
it can be closer. Sometimes it can be.
that. Welcome to trading.
Let's go.
I'm still amazed by First Solar yesterday. I mean,
Crazy move, man.
yeah.
One that I'll put on your radar since you're seeing that First Solar is SEDG, because that one loves to run a decent amount and had good earnings before First Solar. Has started to get the move. What I like on SEDG is looking at deeper time frames like weekly and monthlies. Those can kind of help you.
Yep.
I will say what Marc said, and you're looking for the next potential bull market. I still think solar could still be a driver here. Look at ENPH. And this is off $138 from the high there. If we go to 339 down to 120 now. But I'm looking at this whole 200 area here, Joel.
Ooh, nice.
And I'm like, we've come back, and here's a stock that's just been a monster performer for a very long time. Not a cheap stock. But if you look, you've got an overall uptrend here. I'd lean on the 200, the low that we just made 4 days ago, 196. I don't mind this setup here. Again, if we're going in a full bear market and everything's going to collapse with it. But if you think we're just going to chop around and sideways, and you're looking for something for the potential, and even looking at the tan, I mean, maybe you don't want to pick on an individual stock, but the strength from First Solar, SEDG, to your point, has been holding up very well here, Mitch.
Yeah.
I think some of these solar stocks could eventually catch a bid here once again.
We'll see. There's a lot there, right? And I think there's some smaller ones too that you guys can keep an eye on to see if we start getting moving, like Sun W and things like that, and SPWR, Sun Power. But those don't look as strong. So at least there's very rare times that I would say at least I'm not looking at the laggard style trade there. I'm still looking at the leaders, SEDG, First Solar,
Sure,
and maybe ENPH, because these other ones just don't look good. Like that Sun Power chart, I don't think that looks good.
And you're right. There has been some laggards here too. Smaller company, maybe not making money. I don't know if SunPower is. I had a really good one in SunPower a couple years ago. This was one of my good ones where I bought it like $5 or $6, and I actually got out of some at 50, which is unbelievable. I never hold anything that long, but that was one of my biggest winners from 2020, I believe it was. And it's come a long ways back down. It does have good support down here at 15, 14, 15.
Yeah.
But if you're looking for the leaders, you got stocks like First Solar and Solar Edge near all-time highs, and you got this thing significantly off the highs. Definitely not one of the leaders.
Sonova Energy, someone mentioned here. That's the smaller one, not performing as well. Looks like you need to clear $18 in that one.
Canadian?
I'm not sure.
Which one? Nova?
Sonova. Maybe I'm wrong. I feel like that's Canadian.
CSIQ looks okay too.
That's not Canadian, believe it or not. Canadian Solar. I don't believe that. I don't believe Canadian Solar is Canadian. Let's look. I might be wrong on that. Maybe I'm wrong, but I don't know if it is. It's got to be Canadian. Canadian Solar.
What about Canadian Pacific?
It's got to be. Oh yeah, it is. I'm bad. It's in Guelph. So
Come
it is.
on.
But you know what it is? I don't think it trades. I'm not sure it trades in Canada. Canadian Solar. Is there a Canadian symbol for Canadian Solar? Or I don't know if there is. That's what's screwing me up.
Sunnova, at least I checked it out. It looks like it's based out of Houston, Texas. So not Canada.
Canadian Solar doesn't trade in Canada. Isn't that crazy?
They want to trade over here, man.
Yeah, I know. You got to trade over there. It doesn't trade in Canada. It only trades in the US. That's what screws me up. Canadian Solar, yet it doesn't trade on the Toronto Stock Exchange. Weird.
That one actually looks interesting. I like the pullbacks. I like the monthly chart, how you kind of have that inside candles similar. Now you can get through those highs, especially the January high, 44.06. See if we get through there. All right, let's keep going. Let's get to the disaster stock of the day. Disaster stock, Silvergate Capital.
You read my mind, Mitch.
It's trading lower, of course.
Wow.
The company's saying it's unable to file its Form 10K for 2022 with the SEC. And I've been pointing red flags in coin, Silverbase, MSTR since November. I'm going to keep pointing that, and I wouldn't be anywhere near anything that has exposure to crypto, but that's just my outlook into it. It's up to you guys.
It's decoupled these stock. I mean, you've got a little bit of a rally in micro strategy and things like that, but the stocks just what's the other one? Mara.
Stocks
yeah,
decouple.
Mining
decoupled.
stocks,
Stocks
coin.
decouple when they say going concern. You never want to hear your stock talk about going concern. You
I'm
never
going
want
out.
those words written on any stock that you own. So far, Bed Bath and Beyond talking about potential, because going concern eventually often leads to bankruptcy. When they start talking about concerns about still being a going concern, eventually they often lead to bankruptcy. And we've had a number of stocks talking about this. Obviously, Carvana hasn't said it, but we've been worrying about that one. We've had Bed Bath and Beyond. They did the big, capital raise, but diluted investors so much that the stock had to fall. Novavax mentioned it 2 days ago, and we can see what happened with Novavax. And now you get SI with the dreaded going concern commentary here. You don't want to see that said on a stock that you own.
It hasn't popped at all. That Novavax. Should I don't even want to give levels. I mean, I don't want to give zero.
This gets
here.
supported 0.
Okay, I do. You took it. You took it right out of there. I don't want to say it because why I don't like to say things like that because people own the stock, and
I want them to get out while the getting's good.
Yeah, man, you can't act like things are rosy when your company's
sometimes stocks
mentioning
rally
things
when
like
they go
that,
bankrupt.
right?
We saw it with PCG. We have seen it happen before, but it is not a common occurrence. And they often don't go to 0, but they usually go to pennies when they go bankrupt. So, and they usually get delisted, and then they're in the pinks and the pennies, and they stay there for a long time.
Lucky Kitchen. Look at Lucky Kitchen.
Where is that Lucky Kitchen? What's the symbol on that thing?
LKNCY.
It's too many symbols. Once you have 5 tickers, you don't own stock.
I know it's at $30 though.
5 letters either.
$30, Dennis. $30.
Did it do a split or did it do?
No.
I don't even.
No, it didn't.
This is like the hope story, and
it's on
you
the
don't
pink slips,
often
though,
see.
right?
What the 95 cents during COVID? No one was drinking coffee in China.
It up myself.
Hertz did the same thing when it was in the pinks,
They
right?
did, yeah. No,
Hertz did the same thing. When they go to the pinks, they seem to
wait. Though, didn't Hertz do a reorg?
Yeah,
Hertz
it went pink
just
first.
Like all of a sudden,
it went pink first and then came back
around.
Yeah.
Didn't it do a reorg?
Yeah,
I guess shareholders got something maybe out of it, but there was a full reorg on that too. So you got to just watch as looking at the share prices, because sometimes there's a reorg and they take shares from you and then they don't adjust the charts. So I feel like Hertz just didn't go straight back up. Maybe I'm wrong, but on some of these, again, we point out 2. I could probably point out 100 that didn't do that. Where's Sears Roebuck, Joel? Where's Polaroid? Where's all the there's a ton of other ones out there. Remember Excite at Home? They were going to be the one that we were challenging before Google even existed. It was Yahoo and Excite, and that's what we do our search on. And this Yahoo and this at Home Excite, it merged with the cable internet provider at Home, and it was Excite at Home. That went to 0. So I mean, a lot of times, if you're buying bankrupt companies hoping for a thousands of % return, you're going to be left hoping in most of those cases.
Someone brought up the Revlon chart. It's trading on the pinks now. REVRQ, 68 cents now. That Revlon.
I mean, this is what is typical. It's not really norm for these stocks to turn around and people saying, I'm showing my age. The bankruptcy stocks all go up. Well, you keep trying that. Keep trying those bankruptcy plays. I'm going to stay away from those. I don't want to hear going concern. I don't want to hear possible bankruptcy. I don't want to hear any of that if I'm investing in the company.
Well,
invest in good companies at reasonable valuations. Don't invest in bankrupt companies at no valuations. That's just my tip. Do what you want,
I don't know if you guys are thinking recession, but I think we should all just take a trip to Six Flags because it looks like it's popping here. Let's go to Six Flags Entertainment Q4 EPS 16 cents misses the 18-cent estimate. Sales of 279.88 million missed the 280.33 million. And I think that these statistics say it all, right? Their attendance is down 30% year over year, yet total guest spending per capita is up 23%. Admission spending is up 24%. And in-park spending is up 22%. So that says it all, right? Inflation causing prices to be a lot more. They're still able to kind of make some revenue out there, but the attendance is just atrocious, down 30%.
Inflation is good for revenue increases. I mean, this is, to your point here, Mitch, you can have less people and still have as much revenue. The problem is that your costs are going to go up with inflation as well. So it doesn't really help the bottom line, but it definitely helps the top line. So if we were just a top line market that didn't care about the bottom line anymore, rah, go inflation, because you know what? Top lines will go up. The sales will go up with inflation, but the problem is the expenses go up with inflation as well, and sometimes they go up more rapidly.
But you also need less people working, right? If you have less
customers,
less customers, less employees, less.
Well, that's why they're all firing people.
Yeah,
we're gonna have just as much revenue, and we're gonna have, but then you got the cost of goods sold. That COGS throws a little weird, wrench into the wheel there, but. I mean, you got to look at your companies. You got to look at what's, there's obviously, a full balance sheet. If you want to do balance sheet analysis, we could spend 10 minutes on it. We were in this market for years. It just cared about the top line. And a year and a half ago, we switched to start caring about the bottom line. Until we switch back to the top line market, you got to worry about the bottom line. You got to worry about those expenses. And you can't just buy a stock because you're anticipating higher sales.
29.5 looks like a good area in the Six Flags. If 29, little seller there at 29. So, but 29.5, if you look at the upper right chart, there's about 4 highs in that area. So 4 highs good enough for me to give that a 4-star level. Before we wrap things up, let's go Krogering.
Krogering. All right, let's take a look at the Kroger stock here. Of course, I've been watching ACI. I had a question on that for Dennis, but let's take a look here at the Kroger numbers. EPS at 99 cents, beat the 89-cent estimate. Sales at 34.82 billion, missed the 34.91 billion estimate. They did pause their share repurchase program to prioritize deleveraging following proposed merger with Albertsons.
I think their ACI has been leaking here. Obviously, they're worried this merger might not go through. I don't mind the ACI down here. I actually had it for a long time, and it just kind of was doing nothing. And I didn't like where we were in this full-on bull market. And again, ACI is a grocery store, so it's going to do its own thing. But then I just started, you look at it, and the dividend, and then, really, it's not trading at 21. It was really trading at 27 because of the $6 dividend. And I sold it about a month ago just because it wasn't going anywhere, and I scratched it out. And now it's started to leak here. I do think ACI is okay. I don't know if the merger goes through or not, though, and this is the problem. So if it doesn't go through, it could start to obviously continue to go down. I think I'd almost just rather own Kroger at this point in time. If I was picking on one of them.
Up $2.
I'm not chasing. Not today. I don't buy stocks not $2.
It's in no man's land here, really. Yeah. It looks like it's bid. You got aggressive buyer here. I would look for sellers if the rally continues. You get the strong bid off the open. I see some room up to the 46.5 area. That's an area of 3, 4, 5 different highs. And also with this one, I can remember this doing some reversals. If you get let's say you open 45.5, you go to 46.5, and then you come back down through that open, you may want to readjust your strategy on that one. But Kroger opening into some overhead supply at 46.5.
All right, to wrap things up, I wanted to ask you guys, and I want to do this more often, is how do you feel in the short term and in the long term about the market?
Do you listen to the show?
I know that much, but
short term sideways, long term down, 10-year time horizon higher. So if you got a 10-year time horizon, you can buy some stocks here. If you got a 1-year time horizon, I think you're going to regret buying stocks here. If you got a 1-day time horizon, you might like buying stocks. So I have 3 different opinions on the time horizon.
Yeah, which is
so short term,
what you got?
Come off quite a bit.
I told
here.
you guys are the high for the year is in, and I'll tell you when the low for the year is in. Yeah,
I can leave that out after you said that.
I give this information every single day. I tell you what it is. I tell you where I'm at on a weekly basis. I tell you where I'm at on a daily basis. I told you guys. 4,200.
I thought I told you.
You can't see me. He's doing the John Cena. You can't see me, team.
John Cena. Okay, guys. Great show as always. I'll check in with you later.
Have a good one. Definitely keep up with, of course, PreMarket Prep Plus on PreMarket Prep's channel. If you guys don't subscribe to PreMarket Prep's channel, what are you doing? Come on. Check out the closing print also. That starts at 3:30 with Joel Elconin, and he brings on some guests. So you guys want to check that out. And let's go ahead. Let's wrap up this market, Dennis. We'll see what happens today. How do you feel about those energy names? I started paying attention to them a little bit yesterday.
I'd be a buyer of energy stocks here. I like the pullbacks. You know how I am. And again, I kind of buy when the moving averages probably are looking not that great. But, I've been nibbling on some oxy here. I feel like Warren Buffett, although he hasn't come to the rescue here yet, he's holding off pretty good because I thought he would have bought on one of those days.
How long does he have to tell us?
2 days, because he owns over 20%.
There was still 30 million shares traded on that the day after the earnings.
Yeah,
I don't know. That's a lot of volume.
I think it's 2 days. We should ask the Brentster. Brentster would know.
Yeah,
this
Brent would be really good at this. But I think at the end
when
of
you're
today,
over 20%,
right?
I think you got to disclose within 48 hours. And maybe somebody knows in the chat too. If you're under 10%, you can go on the 13F, and that can be 45 days later. But because he owns so much stock, he's got to disclose it sooner. So I think it's 2 days. I don't know if chat can verify that.
Yeah,
Ben's saying 45.
Sure
it's not 45 days because he owns over 20%.
No,
if he owns over 20%, you become under different guidelines. So it's 45 days if you own under 10%. I think if you own over 20, and it might even be, I don't know what that threshold is, but he owns like 22%. I believe he's got to disclose within 2 days any trading activity.
Mm-hmm. So that's what I'll be watching. And then we have some levels to watch in Oxy. We can get back above 60s. Yesterday's high, 60.09. You look to the left of that, 60.56. Really, there's some also resistance up towards maybe 61. But once we get to that levels, it'll look for a little bit of a turnaround. I did see Chevron, kind of similar charts, right? Bottoming levels. Also the same kind of chart, if you think about it, for ExxonMobil, just a little bit different in the price range where it's at on the daily, but also kind of bottoming factors there, multiple bottoms, now starting to try to come back up through those highs. And then just one more that I mentioned yesterday that had a good move that I put on the radar was MPC. This one looks interesting. Marathon Petroleum Corp has held the trend really well, hasn't really broken down, put a nice bullish engulfing candle yesterday. So this is one that's on the radar. All right, we'll go ahead and get out of here, my friend. Anything else?
I was trying to research that. If it's 20, it's 10. I'm pretty sure it's 2 days. I'm
pretty sure it's 48 hours. Now, the question would be, is
Brentster
at the
would
close,
know for sure.
Is it at the close, right? It would be at the close for 48 hours for me. I would think that would be, they would have to report it by the end of 4 p.m. today. But I'm going to go ahead and I'll check on that. I'll do a little research to kind of
we'll find that out. Ask the
it.
Brentster too. Brent's really good with that stuff, so he's probably going to know. It changes as you buy more. You've got to disclose sooner. So as you acquire more, 10% is a threshold. Under 10%, then that's when you're seeing 45 days. But once ownership passes, passive investors label reaches. I'm just reading. I see 20% required a 13D within 10 calendar days. So I'm not sure if that's up to date or not. Somebody's saying it's within 10 days. So within 45 days, if your ownership exceeds 5%, or within 10 days, if your ownership exceeds 10%. I'm not sure if it goes to within 20. So I'm just grabbing this, so it looks like if you're under 5, you got 45 days. If you exceed 10, then it says you only have 10 days. But I think there's something that's even less. I thought it was 2 days, but I might be wrong. Maybe I jumped that up in my sleep.
All right. Well, it looks like we'll just check it out. Well, I'm going to confirm for you guys. I'll take a look at it on live trading.
Yeah, we'll find out.
Around. We'll go ahead and make sure.
Definitely
have a good one, Dennis. Go do what you do best, my friend. Get to your trading action. We'll have you back on. You guys can keep up with everything the Trader D, Triple D Trader does. Like always, give him a follow on Twitter. I'm going to go ahead and wrap up, bring you guys over to live trading up next. And don't forget, team, today is what? It's National Book Day, of course. You guys don't want to miss out. I want you guys to go ahead and make it over. World Book Day today. We got books, man. Do you see that back there? There's about 4 books that we're working on right now for our book club. I want you guys to join in. We're going to be doing Japanese candlestick trading book. I'm actually announcing it right now for the first time. So if you want to learn a little bit more about candles, like I just talked about for MPC, that's a bullish engulfing candle on the daily. And I'm talking about this right here, this little setup. Well, come on over to our book club. That's where we go ahead and read and go ahead and discuss on the weekends. This is Sunday nights. So if you guys want to keep building on your skills and want to join us for the book club, I'm going to throw up the link right here. We have over 300 members, actually over 325 members. So if you guys want to keep upping your skill, and remember, this is the only video that is absolutely exclusive to members out there. No one on the public is being able to get this. You have to sign up for the book club. This is the only video that I have on Benzinga that you have to be a part of the membership to be a part of. So I want to see you guys over at the Financial Book Club, and we keep growing. I think one of the things that I love is that we bring different traders' opinions into that show, and we get to discuss different outlooks. If you run into a barrier in your knowledge, this is where you want to discuss it to take it to that next level. We'll see you guys over on live trading. That's starting up now. Hit the like button and let's keep it going, team.